It's not about picking stocks. It's about picking the right portfolio.
When I went to Yale and went to the econ classes, particularly freshman year, I noticed that all the rich kids were doing crossword puzzles and stuff like Hangman. They already knew the material. I'm like, holy shit, I'll be lucky to get a B in this class. First of all, it doesn't make common sense. So how do I get the right answers to tests that I don't agree with? And I don't even know if I should agree or disagree. I didn't know anything, right? But what Yale economists or linear economists or all establishment economists, don't forget that the Federal Reserve has basically a 0% probability of a recession in their numbers. So that's why you shouldn't do that. And maybe that's why they think that they had the answers to the tests and they could do crossword puzzles while I was trying to like feverishly take notes. Right, I always remember that. So let's go to the big G on the next slide. And the cartoon is representative of the real problems here. I mean, these are real societal problems. But next slide. U.S. federal debt, just to start, Jonesy, starts with $32 trillion. Okay?
It's now 33.
33. Yeah. So there you go. Like you said, they just added how much, like in a week?
Well,
last
weekend, 250 billion.
Okay, so the next slide says 33. I was front running you.
Yeah.
See how I did that? See, this says 33. Okay. Just like a bit of a problem. So for those of you that don't know what that means, I mean, can I get this in here? How do you get that out of there? There you go, thank you. So for reference, in $100 bills, who's got $100? I give Jonesy $100. This is from like when I was in Vegas. I won a bunch of these hundos.
Hundo.
So 100 for you.
Okay, great.
100 for me. Ethan, 100.
What are we doing, liar's poker?
We're going to play a game, all right?
Do I get one?
Nope. Nope. Okay. So we got 100, okay? $100. For reference, in $100 bills, 1 million of these would fill a briefcase. 1 million, okay? 1 billion would fit on 10 standard pallets, okay? 1 trillion would cover the football field to a depth of 7 feet. 1 trillion, not 33 trillion. 1 trillion of these. Got that? So alternatively, and again, tell your friends that watch fantasy football. See this? 1 trillion equals 100 football stadiums full of one to a height of just over Josh Allen's head now. And multiply that by 33 times. Everything's great. Joe's going to have a great, he's going to wake up at 11 and do his presser at 11:30 and say, America's great again. Like, are you out of your fucking mind? I mean, come on. Stop it. Next slide. Give me that $100 back. Man. So this is the rate of change of real government spending, okay? So you know how we focus on rates of change? This is how you make sure you don't enter a recession, right, Jonesy? You just say, okay, screw my kids and their future. Hunter's screwed anyway. Let's go. Let's just rip this sucker. And this was happening at least. I mean, this is what government spending was cut because the growth was a problem of both the balance sheet and the deficit. But that's what happened. Next slide. Now, when you think about this like in terms of base effects, this is the main reason why we're so confident that you will be in a recession by the first half of next year, heading into the presidential election. So if I was Joe, it's kind of like a smart thing, right? If the guy just, I think even his dog has been biting people. You heard about this?
Yeah, I saw that, yeah.
That's a terrible thing. I mean, it's like I think his dog's named Commander and he's like eating people. Like, this is like, but if you know that, like, he is going to be going in, if you sign off on big G, then you know going into the presidential election that you're going to slow against those big G base effects. So you don't just get that last chart, go back to the other one for free. You don't just get that for free. No, now that's your base effect. So for all of 2023, you could say, hey, look, there's no recession, the jobs market's great because you bought the numbers. And then you got to compare against it. So I think that's the biggest problem here, Jonesy, and that's going to be something, that. And by the way, just to give it credit where credit's due, it's both Republicans and Democrats. Yep. Go to slide 113. But it's not like what Joe did this year. Okay, So when you look at today's government hiring numbers, the payroll gains that we've seen in 2023, they've gone like lunar as well. Now, like I said, like it's not like, so this is year 20, this is Trump, in here. Now this is something. That last I checked, that's a multi-standard deviation move going all the way back to here. Okay, so yeah, the jobs numbers are good because you bought them. Yeah, that's what happened. The Hedgeye nowcast was wrong on a couple quarters because we didn't have that plugged into the model. Now we do, and it's the base effect. That's tough.
The other thing alongside all this is the interest expense that the government's paying.
Oh,
which based on Q2's numbers is about $10,000 per person per year in the U.S. Just government interest expense.
yeah,
So it's like this whole thing is unsustainable.
I mean, why would bond yields go up? I mean, because you get sovereign credit risk associated with that.
Yeah.
Just like for forever and a day, people will say that didn't matter. But at this point, you can't say that. You can't say that the jobs numbers aren't hawkish. Jobless claims yesterday or today's payroll report on the three big things that are moving bond yields. You got inflation expectations. You have the big G equates to one more good GDP number, which is going to be reported not imminently, but in the coming weeks. And then you got the credit rating risk, which is the one that you can't really model because that goes all nonlinear on your ass too, Joe. So
Nobody asks about the Atlanta Fed at being at 4.9 when the market's going down.
No. And so now, like, the bulls are really stuck because they got to basically beg and pray for a recession, but they don't really know that doing that makes it even worse.
Well, actually, they don't want a soft landing anymore.
You don't want that either. I mean, let's just start handing out. Let's start handing out $100 bills. I mean, it's a
hard being a bull. All right, you know what? I think.
Did you keep that 100?
No, it's right there.
Yeah. Oh, thank you.
Well,
Thank you.
tomorrow,
Ethan, you can keep it.
It's going to be worth 99.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.